Okay, welcome. Hi guys, welcome to the pre-market overview. Today is Thursday, August 27th. Happy Thursday to you. So for those that might be new to this, just to explain what's going on. So my name's Becky. You can email me, becky@tradewithufos.com, if you have any questions about what we covered today. There's also the support team, those guys being a team, many more of them, I should say. So you can email them support@tradewithufos.com. You'll usually get a quicker response than emailing one of us directly. Everybody in the team is a trader, so we're happy to help with whatever questions that you have. Okay, so pre-market overview, what's the point? What do we do? So basically every weekday we send a newsletter out. So that newsletter contains information for 4 of the major markets in the world, where we're using technology there to give us an idea of climate, which is basically trend, how long can we expect that climate to continue, where we can expect price to turn, news and volatility. So we go through those in the newsletter. Now, if you want to subscribe to the newsletter to get that document every day, you can email us newsletter@tradewithufos.com and we'll put you on that subscription list. So we do the pre-market overview for 15-20 minutes in the morning, just to expand on those concepts, explain a little bit more as to what's going on behind it for those that need a little bit more explanation. Now, for those of you that are joining us from within the Tradewithuf channel, just a reminder, today is Thursday. So you have stocks and investing today. Stocks at 9 a.m. and then investing at 1 p.m. Of course, Mondays, Wednesdays and Fridays is when we have futures and options. And then there's the sharpening sessions over the weekend as well. I would say to you guys, the Saturday sessions are the psychology sessions that we have with Reynaldo. So important to keep up with what's going on between your ears when it comes to your trading, the way you think about your trading, how you stick to your plan or not. Very, very important. And then the Sunday sessions with Jose, normally it's Jose, sometimes it's me, where we go through the methodology and go through concepts and reinforce certain ideas that we use. And of course, you can bring your questions to those as well. So very important to use those sharpening sessions as much as you can. Now, in terms of upcoming live courses, the next one we have is the trading plan class. So that will start this Saturday, August 29th. It'll be me taking that class. And of course, we go over how to build and what to include in a trade plan. After that, we have back testing mid-September, futures towards the end of September, stocks, and then psychology into October. So you've got the dates there on the screen if you want to use those. Okay, so I just need to put the disclaimer up. I'm not going to read it. It's a long disclaimer. It will take me a while to read it. So of course you can mute me and read it if you'd like, or you can pause the video or obviously come back to it later and read it. You can also go to the website www.youcantrade.com for additional disclosure information on there. Now, of course, basically what we're saying is that there is a risk involved in trading. There is an inherent risk involved in trading. You need to be aware of that, and it's your choice to take on that risk. And that everything we go through are ideas and demonstration. It's educational content. It's not to be seen as a trading pick or trading advice. It's all sort of demonstrations as to how we use the technology. Okay, now that we've done that, let's take a look at our newsletter. So let me just get over here. Here we go. So this is the newsletter. This is what we send out every day. So like I said, we go through 4 of the major markets in the world. So we have the S&P, which is one of the major equity indexes in the world, or indices in the world. We have oil and gold, which are obviously major commodities as well. And then the euro, which when we look at it as the euro versus the US dollar, that currency pair is the highest traded currency pair in the world, and spot Forex is the most traded asset class in the world. So lots and lots of volume moves through just that one market alone, let alone obviously major commodities and one of the major equity indexes in the world as well. Now the US dollar just by itself is responsible for 80% of transactions worldwide every single day. So again, lots of volume moving through these 4 markets. So even if you don't trade them directly, I'm sure what you trade will be correlated to at least one of them. Now we go through a daily time frame on each of these markets. Of course, different things happen on different time frames, but the daily time frame does seem to be a very common one that a lot of people use, whether you're long-term investing or short-term trading. The daily is very commonly used by most styles of trader. Now, for each market, I'm just going to clear that. For each market, we're going to look at climate. Now, climate means basically trend. What market environment are we in? But it's not just trend, it's what are the probabilities associated with that. So do we have an upwards moving market with probabilities? Do we have a downwards moving market with probabilities? Or do we sort of lack probabilities either side? I'll show you how we use that on the chart in a second. So we need to understand climate. What's the trend? What's the direction we're going in? What's the probabilities associated? We also want to understand propagating. Now, propagating basically means if we're in an uptrend, if we're in a market environment to the upside, how long can we expect it to keep going up for based on what normally happens? If we're in a downwards trend or downwards market, how long can we expect for it to keep going down for? So on the right-hand side, we see what normally happens. What's the statistical likelihood in terms of a continuous movement to one side or the other? And then we see on the left-hand side, how far are we relative to that? So what happens normally, what's statistically likely, and what's going on right now, which again gives us the probabilities there as to whether or not we're likely to see a continuous move to a particular side, or whether or not we're more likely to see price change and turn in direction. Now, what we also want to know is nearest UFOs. So UFO stands for unfilled order. What we mean by that is where we expect there to be big stack of buy orders in the market that could push it upwards, or big stacks of sell orders in the market that could push it downwards. So we use our Auto UFO app to help us find these on a chart, and it highlights to us where those stacks of orders are likely to be, again showing us where price might be likely to turn. So we use the Auto UFO app for the UFOs, and we use the Auto Climate app for the climate. I'll show you them both on a chart in a second. So we go through each of those things per market, and what we'll also do is come down to volatility per market as well. So volatility just means how far we expect price to move within given periods of time. What we do is we look at the current implied volatility figures. So you'll see here that these are each percentages. So what these numbers mean is what we expect to happen per year. So movement up or down per year as a percentage of its current value. Now, these numbers come from the options pricing of these markets. Options are traded by professional traders, the professional traders that are buying and selling the options and therefore setting the price of them. Inherent in what they're willing to buy and sell it for is the risk they're willing to take based on how far they think price will move. So basically, these numbers reflect the professional's opinion in terms of volatility. So again, these numbers are a percentage per year. So those are the annualized numbers. We can then reverse engineer that to tell us what we expect in terms of movement up or down in a day, what we expect up or down in a week, and what we expect up or down in a month. So we're going to do that for each market. So we'll go through climate, propagating, UFOs, and volatility per market. Then we'll come down and look at news, high impact news that we need to be aware of today. Okay, lots to do. So let's get started. We're going to look at the S&P SPX.X. That is the continuous, sorry, no, it's not. It is the index symbol on TradeStation then. Okay, so we have at the bottom here, this is the Auto Climate app on the bottom of our S&P chart. Now, the Auto Climate app shows us one of three things. So it will show us, like in this example, a thick blue dot, which in this example basically is telling us that we have a confirmed upwards climate. The blue tells us it's an upwards climate, and the fact that it's a thick dot tells us it's confirmed. What that means is we have an upwards trend, upwards moving market with probabilities to the upside. It could show us a thick red dot. Thick red dot tells us we're in a confirmed downwards climate, probabilities to the downside, downwards trend and probabilities. It could show us a thin dot of either color. Now, the color will still tell us the direction, but the fact that the dot is thin, that is the Auto Climate app's way of telling us there are a lack of probabilities, therefore unlikely for anything to happen with a statistical advantage. Therefore, we don't really do anything. For us at Tradictive, it's all about putting as many odds in our favor as we can, and we use technology to give us those probability ratings. So again, if the dot is thin, meaning lack of probability, again, normally lack of action when it comes to trading. Now, in this case, we have a thick blue dot, so confirmed upwards climate, probabilities there to the upside. We have our closest stack of buy orders here. That is at 3443.62 and 3425.84. That's where we have the closest stack of buy orders, as shown to us there by our green UFO. Now, what we don't have are any sell orders above, just to show you here. We've got nothing above us, no price above us, no red UFOs, because we're at all-time highs. There's no price data, so there's no sell orders. We can't find sell orders. So you'll see on the newsletter, if I come back to it here, you'll see on the newsletter that we show it as blank at the moment, because obviously there's nothing there we can't show you. So we saw that we had a confirmed upwards climate. We see that here on our newsletter. We show you an upwards green arrow, so confirmed upwards climate. Now, normally we would expect that the S&P would go up for 11 candles on a daily chart. I'm just rounding out that number, rounding up that number on the right. So everything that's on the right-hand side, I'm just going to round it up. And no matter what the decimal place is, I'm always just going to round it up. So here we see that the S&P would normally go up for 11 candles, and we're on candle number 20. So we have obviously gone past what is statistically likely. We've gone past the probabilities here. We're overextended to the upside. That's not to say we won't see that keep happening. Of course, sometimes that happens. Just because something is probable doesn't mean it's definite. So of course, sometimes things fall outside of that. But just bear in mind, the longer we go past what is statistically likely, the less likely it is to keep happening. So we are lacking probabilities here of a continuous move to the upside. Now, saying that, we have no sell orders to show us any pressure to the downside. We have buy UFOs beneath us. We have a confirmed upwards climate. So overall, we've got probabilities there to the upside. But again, just bear in mind, we do lack probability that it will continue to move up. Now, in terms of expected volatility, we look at the VIX.X or the VIX, and we see from that that the professional opinion is that the expected movement in 1 year would be up or down of 23.33%, which means in a day, a movement up or down of 51.13 points. In a week, a movement up or down of 112.55 points. And in a month, a movement up or down of 234.29 points. Okay, so again, that's the movement that we expect there on the S&P. Moving on to the next market, we're going to look at oil. So we're looking at CL there. That is the continuous futures contract for oil. Let's get that up. At CL. Okay, just wait for that to load. Here we go. Okay, I'm just going to squish it down here so we can see what we need to see. There we go. So once again, we have a thick blue dot on our Auto Climate app telling us that we have confirmed upwards climate. Probabilities there to the upside. Closest stack of buy orders is here. That's 26.31 to 25.80. Obviously nestled just above another one there. Then we have our closest stack of sell orders, as shown here by our red UFO. That's at 53.83 to 55.71. Now, as we can see here, we're kind of in the middle, not really near either one. Yesterday, we had a buy UFO in here, but that's disappeared. And again, price hasn't really done much for a few weeks now, not really gone either side. And normally that's because we haven't been really close to either stacks of orders. At the moment, once again, we're in the middle of two stacks of orders, not close to either side, which means we have no pressure upside, no pressure downside. Hard to really tell what's going to happen. The only thing we have in terms of probabilities there is the confirmed upwards climate. So probabilities to the upside from the climate. So let's go back to the newsletter. We see on here, confirmed upwards climate. Normally, we would expect oil to go up for 7 days, and we are on candle number 3. So seven candles on a daily chart, 7 days, and we're 3 days in. So we still have probabilities that the climate could continue to the upside, at least for another few days. Again, we're not close to either stacks of orders, so no buying pressure or selling pressure to push it one way or the other at the moment. So at the moment, the only thing we can go by is the confirmed upwards climate with probabilities for a continuous move there to the upside on oil. Now, when it comes to volatility, we look at OVX.X, and we see that we would expect a movement up or down in 1 year of 33.79%, which means in a day, a movement of 0.92 points, in a week, 2.02 points, and in a month, 4.20 points. Again, movements either up or down. Okay, so that's oil. Let's move on to gold. So we're looking at GC. That's the continuous futures contract for gold. So here we are at GC. Okay, cool. Just going to move that again so we see what we need to see properly, and hopefully my face isn't in the way on the top right-hand side. So here we have a thick red dot. So this is the Auto Climate app telling us that we have a confirmed downwards climate. We have probabilities there to the downside. Now we have our closest stack of buy orders here, 1836.7 to 1825.9. Closest stack of sell orders just up here, 2039.7 to 2060.8. And as we can see, we're again kind of in the middle there, between sort of halfway between the buy orders and sell orders, but we do have the climate there with probabilities to the downside. Now, in terms of probabilities to the downside, normally we would expect that gold would go down for 3 candles in a row, and we're on candle number 6. So yes, we have probabilities to the downside on our climate, but we lack probabilities that it's likely to continue moving to the downside because we've gone twice overextended as to what normally happens. Now, again, of course, we can go past it. Of course, it can go 7, 8, 9. Of course, that can happen. But again, we just lack probability that would happen. We would more expect a movement that will change it and move it to the upside. But as we said, we're not close to either stacks of buy or sell orders at the moment, so there is room for it to continue to move down. There's no buy orders on a daily chart that could change it, although there might be new orders that come into the market that do change it. So again, confirmed movement to the downside with the climate, but lack of probability that it will continue. So in terms of volatility, I'm getting confused with my words here. We look at GVZ.X, GVZ.X, and we expect a movement there up or down of 24.79% in a year, meaning 30.4 points in a day up or down, 67 points up or down in a week, and 139.4 points either up or down in 1 month. So again, that's the expected movement up or down in gold. Okay, last market, we're going to look at the Euro US dollar. That is here we go, Euro US dollar. That is the spot Forex currency pair. So it's the Euro versus the US dollar. I'm just going to squidge it down so we see what we need to see and see our sell UFO up there. So here we have, once again, thick blue dot, confirmed upwards climate, probability to the upside. We have a stack of orders here. This is our buy orders at 1.1597 to 1.1507. Just rounded that where it needs to be with the pip. Then we have our closest stack of sell orders there at 1.2344 to 1.2414. Once again, just rounded that where it needs to be. Now we can see that we have a bunch of buy orders on top of each other. We've got loads and loads of UFOs just one after the other, which suggests a lot of buying pressure beneath us. Now we can see a couple of times the UFOs have worked here and here. So for example, this one was a buy UFO, price came in, hit the buy UFO and went up. Came back in, hit the buy UFO, went up. That's what we expect buy UFOs to do, is push price upwards because there are buy orders there. There's buying power, buying pressure. So that's what we've seen happen a couple of times already here with our buy orders. And that's what we would expect to happen again if price did come down and hit this buy UFO. We would expect a movement there to the upside. Again, not always, doesn't always happen that way, but statistically speaking, that's what's likely to happen. For the time being, obviously, we haven't really seen price move very much in the last couple of days. We've had a few unconfirmed climates over the past week or so. At the moment, we have a confirmed upwards climate. And again, buy orders just there, just beneath us. Okay, so when it comes to the climate, we see that we have a confirmed upwards climate and that we would expect normally that the Euro US dollar would go up for 5 candles on a daily chart. And we're on candle number 2. So again, we have probabilities to suggest that we are likely to see a continued move there to the upside with our confirmed climate. Again, many buy UFOs beneath us. So again, expectations would be that we would have movement to the upside based on probabilities. Now again, just because something is probable does not mean it is definite or guaranteed. So we do need to manage our risk just in case unexpected things happen. Of course, the only expectation in life is that unexpected things happen, right? So manage your risk just in case. But of course, it comes down to probabilities and statistics. At the moment, we have a statistical likelihood to the upside there for the euro. Okay, so just volatility there then for the euro. We look at EVZ.X or EVZ.X, and we expect a movement up or down in a year of 7.99%, meaning in a day, a movement up or down of 59 pips, in a week, up or down of 131 pips, and in a month, a movement up or down of 272 pips. So again, the volatility numbers here give us an idea of how far we're likely to see price go based on professional opinion. We use the climate and the propagating to give us an idea of in which direction are we likely to see that move. We use the nearest UFOs and also the propagating as well to tell us when that move might be likely to be coming to an end and when we might see price turn and go in the other direction. Okay, so that's everything in terms of direct forces. Now, what I mean by that is that the most direct forces we have in the markets to move it up or down are buy orders and sell orders. That's all we have. So, of course, there can be many reasons as to why there are buy and sell orders. So we do need to understand indirect forces as well, meaning the forces that can add orders to the market. The one for us that we look at here is news or reports. Now, what we do is we go to fxstreet.com/economic-calendar. We filter by high impact news and by US markets. So, of course, if you want to change those filters, you can go to the link and change those filters and look at other things if you'd like. But when it comes to high impact news on the US markets, The only thing we had this week, we had yesterday and today. So we had nothing at the start of the week, nothing for tomorrow. Obviously, yesterday already happened. So we see here under the actual column, we've had a couple of figures that were actually filled in. And then we also had, you could click on that link there and you could see the reporting that came through on that day. Now, in terms of today, it hasn't happened yet. The next thing that will come out will be in a few minutes, 8:30 a.m. Eastern time. And then after that, we have 9:10 a.m. Eastern time and then 8 p.m. Eastern time. Once those figures come out, we usually see it populated here in the actual column. Of course, hasn't happened yet, so that's why it's blank. So just be aware, especially for the the next few minutes, that we're likely to see volatility hit the markets when we have high impact news that comes in. Obviously, sometimes it doesn't. Sometimes we expect movement and it doesn't happen. But normally high impact news, of course, will push prices up or down and increase volatility there. So again, be aware of that. Again, bear in mind it is an indirect force. It's not pure buy and sell orders. They just might create more buy and sell orders. Again, that's why we need to use our direct forces such as climate and alter UFOs to give us a more objective idea of where those orders are and what price is likely to do. But of course, be aware of the volatility that can happen from indirect forces as well. Okay, so that's everything in terms of content today. So just as a reminder, if you're not already subscribed to the channel, you can subscribe to us at tradictive.com/youcantrade. I understand there's loads of different educational places out there and it can be hard to figure out which one actually makes the most sense to you. So of course, you can try us out for free for 14 days. So have a couple of weeks, see if it makes sense to you. If it doesn't, then fine, cancel the subscription. If it does, then you've had a couple of weeks to really know that it makes sense to you first. So you've got a free 14-day access for the initial trial period. In terms of upcoming classes, like we said at the start, the next one is the trading plan class that will start this Saturday, August 29th. So keep an eye out for that. You can go to the website to learn a little bit more about it. So it's tradictive.com/trading plans live. You can register for any course and get an additional one for free at the moment. So it's a buy one, get one free situation. The second one you pick has to be of equal or lesser value to the first one. So have a look on the website, have a look at what courses we do, which ones you want to do, which ones suit you best, and how you can put them together in such a way where you make the most of that deal, make the most of that offer. If you have questions about anything, not necessarily just courses, obviously you might have questions about what I've covered today or the technology that we use or some other kind of trading question, you can email us support@tradictive.com. We're always happy to help. Otherwise, obviously today, if you're joining us from within the Tradictive channel, we'll see you within the stocks investing sessions as well. And at 4:15 p.m. Eastern, my colleague Wayne will be looking at what did go as expected, what happened with the news, what went in the way that we would think statistically likely speaking, what didn't go so expected, what can we learn from it, how can we move forward with our trading. He'll be doing that 4:15 p.m. Eastern. Otherwise, I'll be back tomorrow morning, so I'll see you tomorrow for the pre-market overview again. Hope your Thursday treats you well. Have a good trading day, and I will see you tomorrow. Take care. Bye-bye.